the JSE delivered strong results for its 2024 financial year, recording revenue growth across most of its asset classes. This as the group's diversification strategy bore fruit, benefiting from sustained positive market sentiment following the formation of the Government of National Unity. Darling caught up with JSE CEO Leila Fourie for further analysis of the performance.
We've seen that our business has been strong, stable and sustainable, and it's consistently over time generating good quality earnings. Our NPAT, our net profit after tax, was up by 10.4%, and our ROE was up from 19.4% to 20.2%. Overall revenues were up by 6.5%, and this is really demonstrating an overriding earnings resilience and strength through the cycle. And it is, as you said earlier, a function of our successful diversification efforts. If we look at our share price movement over the past year, we've outperformed all major benchmark indices, with our share price up by more than 30%, and our total shareholder return is 40%. So way in excess of the local and international headline benchmarks. We are also managing very carefully our costs and our growth initiative, and we focused on delivering much faster through partnerships and focusing on innovation, which is really at the heart of our technology transformation approach.
And we'll get into those initiatives and partnerships in a bit. I want us to look at the equity markets, which seem to be making somewhat of a comeback. Over the past year, we've seen a sentiment improve. It does seem like sort of a tale of two halves, with the first half of the year, quite tepid, quite quiet. But by the second half of the year, we saw the post-national election optimism coming through. Just walk me through how that has, impacted the trading part of the business, even as we started seeing more listings, new listings coming through at that part of the year.
And Darling, we've definitely seen a tale of two halves. And the first half was down. In fact, our first quarter was down 24%, and we ended the market up 1% on value traded. So we saw a surge at that point of inflection during the introduction of the GNU, and that surge has continued into this year. January and February, our average daily value traded is up 45%. And so we are starting to see a wider diversification of investors starting to look at South Africa, whereas investors previously were underweight the index. They were undervaluing our company's ability to grow, the listed entities. That is starting to shift. They're now starting to see a balanced position, and we expect that they will go overweight to the extent that we're able to grow the economy. Of course, stability of the GNU is critical, and the international geopolitical and general macro economic backdrop through inflation and all the geopolitical crises that we read every day is starting to affect us. Of course, we've also seen an uptick in our listings space. We did introduce multiple reforms, and we saw 8 companies listing on the bourse last year, and we've seen more than an increase of more than 150% in the additional capital raised. So all of these signals are starting to show green shoots. We're cautiously optimistic, but we are really focused on managing the controllables in our environment.
We'll get into, the diversification strategy and how that has been boosting revenues. But I'd like to get your thoughts around new businesses listing on the JSE, because what we have seen is a trend of unbundling. Are we seeing perhaps new businesses maybe shying away from the JSE, from listing or markets in general, because of the current economic environment that we are facing, that we're dealing with?
Darling, absolutely. Listings is very much a function of macro sentiment, of business confidence, both globally and locally.
That was Leila Fourie, CEO for the JSE.